Hi everyone. So today I was planning to do a different format for my video, and the goal is pretty much to explain what I'm doing long term. So, like the reason I picked the commodity companies, you're always wondering, like, why would I pick only commodities? Well, like the main reason is simply because I see it as the most undervalued industry, and I believe that anything that is undervalued is by default protect us from extreme downside. So of course in the short term anything can happen and the movement can still go down like 20-30%, so it doesn't secure us from that, but at least it gives us a good caution, protection against like further downside. So in here you can see the chart of S&P commodity index versus the S&P 500. As you can see, this is from the 1970s up to 2020. So basically what I'm seeing is we might recreate a scenario as we've seen in the 1970s up to 1980s. And then at the moment, as you can see, we're pretty much at the 1970s level. So I will explain now what the interest rate is in the United States. So you can use pretty much any of them. They look similar, but I would say the best is to follow the US because that's what half the market is following, like worldwide. So as you can see, the Fed funds interest for the 1970s to 80s was going up and then declining up to 2020 around COVID time. That was in my opinion the bottom, and then now we are towards a upward trajectory. So this is what I'm seeing in the long term. So that doesn't mean I would be fully right, but that's my kind of vision that I see. So that's why I base my trade on that vision. And the second point I wanted to add is so this is actually a chart of the treasury note, which represent pretty much the equivalent of the interest rate, fund rate. And as you can see, same scenario from the 1960s to 1980s. It was inflationary environment, so had to raise interest rate. And then from the 80s to 2020, it was like lowering interest rate constantly. So that was usually a good time for all the tech stocks or technology or anything to do with new inventions. And at the moment, we're going back to inflationary environment. So like I expect this to continue. Like it kind of broke structure at the moment as well on the upside. So it's most likely in the next 5 to 10 years gonna continue upward, maybe up to 10, 11. This is just a guess, I have no idea, but just most likely gonna go up then down. And this is my vision. I could still be wrong, but it gives you an idea of what I see in the future and why I base my research on. Then the thing I wanted to go into more details was the inflation between the 1970s and today. So as you can see, someone like Eric Soda has been like sharing one chart, so I would just put it full screen, and it shows that like in the 1970s, like pretty much the CPI is doing pretty much the same thing that it is now. And if it continues to follow the 1970s, we're most likely gonna see more inflation coming in the next 3 years from 2025 to 2028. And now I want to put that into perspective. If it was to happen some similar scenario as this, then like that would be a revaluation on commodities. One thing to note though that is important is that in this chart you could see that in 1974 and 5 the inflation was there, and the commodities already starting to shoot up. In this case, we're not at that stage yet. So this is like the different bit where I'm a bit concerned on when would that happen, considering inflation is already in there. So I wonder, is it really gonna follow what this chart shows? But yeah, like this is where the work is very difficult, because we have no idea what could happen, and it's never exactly the same, but it rhymes. So one last bit that I wanted to show was with the oil. So I will try to go a bit more in the past. So in the 1970s up to the 1980s, we've seen a huge increase on oil, from like $3, I believe, $3 to $5, up to $40. So that was actually what we seen here pretty much in 1970s to 1980s. And then, as you can see, we've had another scenario. So in this case, it's a little bit messy, but what I was trying to do in my research is to compare what we've seen in 2008. So like basically the 2000 to 2008 bull. So I took the Fibonacci from like the 1990 here to like the bottom here. So it's pretty much give me a range of what happened from the top to the bottom, and then I was trying to see where it went to, and it did 4.2 like times what the range was. So I was thinking, like, what if we have a similar scenario now? So I took the top of the 2008, which reminds me, in my opinion, a lot to the 1990s. And then after looking at the chart, I saw that the bottom, I didn't take the wick, I took the body, because I thought like it went to negative. I don't think it actually makes sense. So I took the bottom in there, and then like the top here, so I would just adjust a bit to the body, and then like from there we can see that the potential of those is so what do we have, like 530 at the top. This is just an indication. I would not just say, oh, this is gonna happen. I have no idea. But what I just like was to see the difference between the last range that lasted 14 years and the current range that is at 16.5. So you already see that it's actually longer than the previous one. But it's interesting how similar it is. I mean, you can see the top there, the bottom similar to here, and then we form a top again near the previous top but not there yet, which is here now. And then we probably at that second, I would say around here, so it might be 1 or 2 years away from starting to increase. This is what I'm seeing compared to that. But something to bear in mind again is that if you look at the fund rate, so during 2001 to 2008, this was just a little like uptrend in a big downtrend of commodities. In this case, we are more towards the 1970s, because we are probably gonna be going on upward inflationary environment. And like because of that, it's a little bit hard to compare the oil to the 08, but still, like, to me the similarities are undeniable, and I would say that it's still worth comparing and seeing like what could happen potentially. So I repeat, this is not like something you would like say, okay, this is gonna happen. No, we have no idea, but we can just check what happened in the past and expect something fairly similar to happen. So that's about it for today. I'd like to know what do you guys think in this kind of format, and to explain what I do outside of researching just companies. I like to look into the charts of different commodities, see when they tend to react and go, and like that's, I would say, not that much work, but sometimes every few months I look at it and compare and see if we are still in the right trajectory or if we completely shifted to something very different. So I have to be always aware before I invest in companies, is making sure that the environment as a global environment, so political and all, is actually following that kind of story. If it's not, then I will have to reevaluate and even maybe sell the companies I have and move into another industry. But at the moment, it's been a while that I've been setting up for that the commodities boom. So I've been like all the news that came related to that specific industry, and in my opinion give me more hope that it will be doing great in the near future. So my plan is to give you updates from time to time, and give you a map on what I do on a few months basis, and then explain like why I do that. That's it for today. Thank you so much, and I see you guys in the next video.